In reflecting upon the current market dynamics surrounding DJT stock, one cannot help but draw parallels to the historic GameStop short squeeze that captivated global financial markets in early 2021. Much like GameStop, DJT finds itself at the epicenter of a fervent battle between retail investors and institutional short sellers, characterized by an extraordinary surge in stock price that defies conventional wisdom. The GameStop saga, propelled by a grassroots movement fueled by online forums such as Reddit's Wall Street Bets, showcased the formidable power of collective action among retail investors. As they banded together to challenge entrenched Wall Street interests, their coordinated buying frenzy sent GameStop's stock price skyrocketing to unprecedented heights, catching short sellers off guard and inflicting monumental losses upon them. Similarly, the surge in DJT stock reflects a convergence of factors reminiscent of the GameStop phenomenon: soaring retail investor interest, heightened short interest, and a scarcity of available shares. While the underlying dynamics may differ, the overarching narrative of retail investors pitting themselves against institutional short sellers remains strikingly familiar. However, it's crucial to acknowledge the nuanced distinctions between the two scenarios. Unlike GameStop, where the company's fundamentals were largely overshadowed by speculative fervor, DJT's valuation scrutiny underscores a more tangible basis for investor skepticism. Yet, the essence of the short squeeze potential remains palpable, driven by the asymmetrical dynamics between retail investors and short sellers. In essence, while the GameStop short squeeze serves as a poignant reminder of the disruptive power wielded by retail investors in today's market landscape, the unfolding drama surrounding DJT offers a nuanced variation, characterized by its own unique set of circumstances and implications. Nonetheless, the parallels between the two events underscore the enduring allure of market dynamics driven by the clash of retail and institutional interests, shaping the trajectory of stocks in unforeseen ways. The recent surge in DJT stock, ignited by the Trump Media and Technology Group's SPAC merger with Digital World Acquisition, has transformed the market landscape into a battlefield where short sellers are entrenched, facing formidable losses. In just 5 trading days, DJT has orchestrated an impressive rally, eclipsing 45%, yet its valuation juxtaposed against its revenue figures has raised legitimate concerns among investors. With revenue hovering at a modest $3.37 million for the 9 months ended September 30th, the current market capitalization of approximately $7.5 billion seems, to many, disproportionate and ripe for scrutiny. Amidst this fervent surge, short sellers find themselves ensnared in a precarious predicament, grappling with DJT's status as the most shorted SPAC in the US coupled with a staggering cost-to-borrow fee of 157.57%, the short interest of 11.69%, and a scarcity of available shares. Their challenges mount exponentially. The ramifications are stark, with March alone witnessing mark-to-market losses tallying $93 million, a staggering figure that compounds into a colossal $158 million loss for the year, representing a harrowing 152% plunge. However, amidst this turbulence, a potent concoction brews, setting the stage for a monumental short squeeze. The combination of DJT's soaring valuation, elevated short interest, and restricted availability of shares creates a perfect storm, tilting the odds in favor of an unprecedented market upheaval. With scant stock borrow available to facilitate new short sales and exorbitant borrow rates constraining maneuverability, short sellers are thrust into an uphill battle of monumental proportions. S3 Partners' analysis hints at an intriguing dynamic, suggesting that ousted short sellers may be supplanted by fresh entrants. Nonetheless, the exorbitant cost-to-borrow fee wields significant influence, reframing the narrative wherein DJT's price trajectory becomes increasingly governed by the interplay of buyers and sellers, rather than the actions of short sellers alone. In essence, the confluence of DJT's meteoric valuation ascent, pronounced short interest, and constrained share availability lays the groundwork for an imminent short squeeze. As short sellers confront the prospect of covering their positions at even loftier prices, the resultant cascade effect promises to further amplify the inexorable upward momentum of DJT stock, potentially ushering in a seismic market event of unparalleled magnitude. Start your trading adventure today and use our Webull or Robinhood referral link to get free stocks. This is not financial advice. Do not make investment decisions based off our videos. Happy trading!